We are live. Some I can see attendees hopping in. Let's wait for a couple of minutes. Good afternoon, everyone. We are going to get started in the next minute or so. While we are waiting here for more folks to log on, let's get to know more about each other. So you guys can drop your business name, what you do in the chat box. I would love to see who all are with us on this webinar today. Hello. Hi, Claire. Great. So I'm just going to present my screen and start the awesome webinar. Let me know if you guys are able to see the screen. Okay, great. All right. A very good afternoon, everyone. Again, warm welcome for today's webinar. Meet the VC with Laurel Touby from Supernode Ventures, presented by Early Growth. And my name is Khushbu, and I'm an event marketing manager with Early Growth, and I'll be your host for today. Just a few housekeeping notes for you all. This webinar will last approximately 60 minutes, including the time for Q&A at the end. You can place your questions in the Q&A panel at any time. This webinar will be recorded and sent to all of the registrants within 48 hours of this presentation. You can also find this recording and all of our previous webinar recordings on our YouTube channel. The link to it will be sent in the recording email as well. Now about Early Growth. Before we get started, let me tell you more about us. At Early Growth, we have got the entire finance stack covered. What that means for you is two things. First, you have got your strategic partner in growing your business. Our CFOs, with their years of experience in dozens of startups under their belts, will help you see what's coming, be it good or bad, and take advantage of it. From strategic decisions to fundraising, they have seen it all before. Second, our CFOs, senior accountants, and tax advisors take care of all of the blockings and tackling related to the day-to-day, month-to-month, and year-to-year of your finances so that you can focus on your business. Both Early Growth and our CFOs have been around the block a few times. We have helped and served over 5,000 clients coast to coast around the world, approximately 40 countries. As always, our CFOs have helped our clients raise billions of dollars, and we would love to help you and serve you as well. So what we believe in delivering peace of mind by providing you all one-to-one solutions for all of your business needs or requirements, including CFO services, HR, accounting, taxes, and insurance. We'd like to protect your profitability by giving you a sole point of contact to answer all kinds of questions and strategic dashboards to help you understand your business and company better. We want to be your partner in growth to help you grow by working in the back end so that you can focus on the growth of your business. And we have a special promo running for you all. You must have been started preparing your 2020 taxes already. You want to get a provider in place before the end of the year so that you can have an effective tax planning before the year ends. So we have this promo running to help you with that now. You can get $500 off your 2022 taxes preparations. Just log on to www.earlygrowth.com/tax promo, and it will last 30 days from now. Just to kick us off, I want to introduce a quick poll of questions to engage our audiences more and to see their preferences and their expectations from our webinar today. The poll will end with the webinar, and I'm going to start it Now, I hope you must be seeing this poll on your screens. You can fill it anytime you feel like and just let us know what you think. So something about our partners. So your team is critical to your success. And that's true whether you're building a startup or putting together a great webinar. We have got a number of great partners in the startup community, but for today's event, it's the best of the best. Early Growth has always focused on the team, the community. We know that together we go further. To bring you today's webinar, we have a great startup dream team. To tell you more about our partners, we have our moderator, Pat Hickerson, with us. He joined as Business Development Manager at Early Growth 5 months ago. Matt, prior joining to Early Growth, was working as Regional Manager at Gallagher for more than 2 years, where he had collaborated and managed relationship with the resellers to help market and achieve their sales targets. He has also worked as a sales consultant for approximately 2 years. With that, Matt has worked as senior sales representative at Juncture for over 6 years. That's extensive. He also enjoys playing golf and doing carpentry and spending some quality time with his wife and 2 sons. So before we proceed, just a reminder, if you have any questions for our VC, please put them in Q&A panel, not in the chat. So now, here to introduce our partners and to take over, Matt Dickerson.
All right. Thanks, Kushbu, for the kind introduction. Really appreciate it. And welcome to everyone who's joining us for today's Meet the VC webinar and panel discussion. Before I introduce our panel speaker and our spotlighted VC firm for today's event, I do want to take a minute and recognize our partner and sponsor for this month. Over the years, we've had the fortune of developing very deep relationships with companies that serve the startup community. Our partner for today's call is certainly no exception. They're wonderful to work with and been a longtime partner of ours at Early Growth Escalon. So just want to take a minute to recognize and offer our appreciation to Kelly Gaviglia of Bridge Bank for partnering and sponsoring today's event. I'm sure Bridge Bank is a very common name. I'm sure many are very familiar with Bridge. Been around for a long time, serving the VC and startup community. For those that aren't as familiar, Bridge provides a suite of banking solution to meet the very specific needs of a startup business. One of the things that makes it really unique is they include a dedicated account management team and client service team to service the clients. And Bridge is very well known in the industry for the high level of service and personal one-on-one guidance that they provide to a startup business. So again, they've been a longtime partners of ours at Early Growth. We truly could not put on these events month after month without the support of our partners. And so a special thank you to Kelly and her team over at Bridge Bank. We truly appreciate it. And we'll put Kelly's contact information. Kushbu, if you could put her information in the Q&A if you'd like to reach out to Kelly. And I'm also happy to make an introduction directly to Kelly and her team for anyone on the call that's currently evaluating their banking relationship or would just like to connect with Kelly. I'm happy to make an email introduction. But with that, and without further ado, I know everyone's excited to hear from our panelists. In spotlighted VC for today's event. So I'm not going to keep you waiting any longer. So I have the pleasure of introducing our speaker and panelist for today, Laurel Touby of Supernode Ventures. A little bit of about Laurel and her background. Laurel is CEO and managing partner of Supernode Ventures. Prior to founding the firm in 2017, she founded another startup, a second startup company called MediaBistro.com, she is a former business journalist, very well connected and remains very active in the media industry. As you can tell from her bio here, hosts a popular tech media dinner and discussions events. She's a very sought after public speaker. Even hosts her own tech show on CBS Interactive. So she's a bit of a celebrity. That is called Secrets of Successful Startups, and I can't wait to hear a little bit more about that. She lives in the heart of the action in Silicon Alley in New York City and is married to John Fine, who is an author and former editor-in-chief of Inc. magazine. So needless to say, we're very lucky to have Laurel with us today to share her experience, her wealth of knowledge with all of us. I'm sure everyone's ready for me to stop talking and hear from Laurel. So we'll go ahead and kick off the Q&A here. First and foremost, Laurel, welcome and thank you for spending some time with us today.
Thank you. Thanks for having me. Super excited to get started and help people, because that's what this is all about, is to help the people on this call with their problems and their questions and shed some light on what's going on right now in venture.
Absolutely. And thank you for that, Laurel. And per our conversation leading up to this, I know that there's no one more qualified to help them answer some of those questions. So again, thank you for being here. So I thought we could kind of kick things off and get started here. I know we've talked a little bit about this leading up to it, but would love to learn a little bit more about your path into venture capital. I know from experience that there's typically not a direct path, right? There's not a college major in venture capital, and most folks don't start off working in venture capital. So we'd love to hear about sort of your journey and how you got to where you're at today.
Absolutely. So I started out in media, actually, as a journalist. I started out at a magazine called Working Woman magazine. And this no longer exists, but it was a career-related magazine, and it also helped with women in entrepreneurship. So I like to say that I got a slow MBA, learning about entrepreneurs and entrepreneurship, writing about founders, basically from the very start of my career. I used to seek out talented founders to write about them. And in the process, I was kind of training myself to be a VC as well, because when you think about it, when you reach out to founders to write about them, you also have to find out about the market they're in, how big it is, whether or not it's growing. You have to find out about their customers. You have to speak to customers. So you're doing some due diligence. So all of those things together combined to help prepare me for a career in venture, believe it or not. So it started out at Working Woman, and then I gradually made my way over to Business Week magazine. And it was there that I decided that I wanted to write for New Yorker and the Atlantic Monthly and places like that. So I left Business Week to go to Glamour magazine and write about business there while I was freelancing. And while I was doing that, I was a lonely freelancer in the East Village, 30 years old, couldn't find a guy. And because I went to a women's college also. When you go to a women's college, you realize later that you are hamstrung. And so years later, so here I was in this position, in this predicament in the East Village, and discovered that there were other people like me who were lonely and single, and this was pre-internet. So I started a cocktail party actually to meet men. And that first party was 10 people there in a little bar in the East Village. People bought their own drinks. And who would have thought that that party would evolve into a business, a multi-million-dollar business with millions of customers, and that I would exit it years later and buy this great apartment. So, so that's kind of my story in a nutshell. We could go deep into all that stuff, but I think that gives you the highlights. After I sold the company, I decided to start investing in who else but founders like me, people who had built stuff, who had sweated blood, sweat, and tears in order to get to where they were going. Those are the people I look for. We can talk about my criteria a little later, but I decided I wanted to be a venture capitalist, and I started as an angel first in 2012, 13, and realized that angel investors don't get treated as well, quite as well as venture capitalists. So I quickly wanted to do the pivot into venture. Had a real hard time getting into venture as a woman of a certain age, over the age of 30 or 40. And so I thought, okay, if they're not going to let me in, I'll just create a venture firm on my own. And that's what I did.
That's fantastic. That's a great story. And like I said, there's typically not a direct path. And I think you're evidence of that for sure. So I do have a follow-up question based off that. I think you kind of answer it, but I'm curious because you are obviously very passionate about what you do, and I'm curious. I'm sure other folks are curious about what you love most about what you do every day.
The thing I love most is being in touch with the people who are creating the future. All of you on this call, hopefully, are building something. Building something in tech, building something on the internet, building something in the real world, what have you. I personally invest in the tech companies, but I just want to be around people who are creating and building. When I was a journalist, I wanted to be around people who were creating and building stories. And now I want to be around people who are building and creating the story, the future, the story for all of us. That to me is the most exciting thing and the most exciting place that I could be.
Yeah, that's great. Can you provide, because I'm sure some folks have done homework on Supernode and some folks maybe haven't. Do want to take a second. Can you provide an overview of your investment thesis and talk a little bit about the fund formation as well?
Sure, absolutely. So Supernode Ventures is a very small fund. It's a nano fund. It's basically 5 million AUM, and we've deployed about 4 million of it. We have 1/5 of it to go. We seek companies we're sector agnostic. So we're looking for any type of company in any industry, which it feels like boiling the ocean, but it's not, because we do have a lot of criteria for things that we really like. So I want to see tech companies. I want to see tech companies with a technical co-founder or founder. We will go in early 50K to 100K checks, and we help with media and marketing. Obviously, that's my background, and that's where I can really, really add value. And not a lot of founders who are starting a company have that background or that ability to be able to get a journalist on the phone or over email and get them to pay attention to your story. So those are the main highlights. We could go deeper into what sectors I've already invested in and talk a little bit about that, but that gives you kind of a broad brushstroke.
So yeah, what is the total portfolio size? How many companies have you invested in total?
Currently, we've invested in about 47 companies, and we've got about 10 more to go. And so this is quite a big portfolio for any venture fund, and it's very hard to manage that. So for fund 2, I'm going to be seeking a bigger check size. I'm going to be possibly leading some deals, and those investments will be $250K to $500K with a $25 to $30 million fund. But for this fund, we're pretty broad, but we put small checks in, and we're really excited to help our founders.
Awesome. So when you're evaluating, and you probably, I don't even want to venture a guess at how many deals come across your table that that you first see in pitch decks you see on a month-to-month basis. But what's that first litmus test that you're looking for, whether or not you're going to continue to pursue a deal? What's the very first thing that you look for when you're evaluating a potential investment?
It's really about the founder in the end, right? And in the beginning. So I'm looking for people who are intelligent about the space that they're tackling. I don't like things that are just, business school student comes up with an idea in a midnight jam session, puts together a quick deck, and goes out and tries to raise $2 million seed, right, at a 20 post. That's something that's not attractive to me. What's attractive to me is somebody who's been a grinder in a space, somebody like me who worked in a space, knows it deeply, knows it intimately. I love vertical SaaS. So, let's say they know an industry really well and they know what's missing in that industry. I like B2B companies, mostly have invested in B2B. And I like that they're technical enough to build an MVP or have a co-founder who's built the MVP alongside them, and then that they've got customer interests. So those are high bars. Those are not easy to accomplish. And I love founders who are immigrants, founders who've bootstrapped, people with incredible passion who can articulate why this is important, why this is a must-have product or service, why the customer wants to buy this. Those are some of the main criteria that I look for. And then I have a whole checklist of things that I look for in a founder, him or herself, or they self, or however we want to say it. Their self, sorry. So I have a whole checklist of founder things that I want, that I look for. So resiliency, drive, passion, ability to lead. I like liars, but not liars who are lying to themselves. Let's just say that. When I say liars, I mean salespeople, people who can sell. I just say that tongue in cheek, obviously I don't want a real liar, but those are among some of the things that I'm looking for. Somebody asked,
oh, go ahead.
These things are easy to say, but how do you quantify these qualities? Am I allowed to answer questions, or should we wait till the end?
Well, so that was going to be my follow-up question as well. So I didn't even see it in the chat. So yeah, go for it. I was going to ask what advice you would have for someone, because that's those aren't quantifiable. It's hard to show that, right?
This is what I like about having been a former journalist, right? And a business journalist. I have to get at a person from every different angle. And the way I do it is by questioning them. I am the most innocent questioner you'll ever meet. I am just so friendly and nice. And I'll say, hey, where'd you grow up? Tell me a little bit about your parents. Tell me about your older brother. Oh, you have an older brother? Tell me, what is he up to? So that's the kind of question I ask. And then I make a lot of inferences from the answers that they give. And this is just pattern recognition, if you will, from years and years of interviewing people, watching how they work and how they succeed or don't succeed, following up with people over many years and seeing what happened to them. So it's not an easy thing for them to game. And that's really important in this day and age, because right now, any founder on the internet can look at a demo day video and mimic that behavior, right? The behavior, the answers to the questions, right? They can mimic, oh, we have a big market, we don't have competition, here's our competition slide. They have all the slides down. It's like 12 slides, everybody knows them, the YC, the Techstars slides. But what they can't mimic are the questions that I'm gonna ask them, which are very particular to that person, to that market, to that industry, to the things I know about that type of industry, that kind of thing. And so those are the questions that I like to ask. Those are the ones that are the hardest to game, really.
Yeah.
I don't know if that answers your question.
No, that was perfect. That makes perfect sense. And actually led right into what my next question was going to be, which was, can you talk about the overall due diligence process? And you kind of just touched on it a little bit, like the types of questions that you ask and things of that sort. But if you could take me sort of soup to nuts, what a founder entrepreneur can expect during the due diligence process if they were to get the opportunity to pitch to Supernode.
Yeah, so it's important to note that because we're a small check, we have to be very respectful of our founders' time and the time of their clients and customers. So I do want to talk to a customer, but I'm also happy to talk to an investor who's leading the deal, who's spoken to customers, and to evaluate that investor and how much diligence they did. So what I often do is ask to speak to the lead investor or somebody who's done the most research and homework on the space, and I'll talk to that person. I might talk to potential customers and offer up intros to a founder. So if I have a founder who has a product or service, I will go into my network, which is vast, and that's why it's called Supernode Ventures, because I created this amazing network. I also host a lot of events, which we can talk about and how that works for my founders. But I reach into my network regularly, whether I've met somebody or just connected with them on LinkedIn, and I will set up calls to meet with potential customers and ask them to take a look at the deck, talk to the founder if they're interested. I also have a few people who I use as advisors who are kind of venture partner advisors who are in industries that I know very well. For example, I have a fellow who worked in sales and has been at Salesforce in a very top job, and he worked for me years ago. So if I have a company that's doing sales enablement, I will check in with Chris and I will ask him, you know, take a look at this. What are your thoughts about it? So it helps to have a really, really big network, and that network that you curate and cultivate through events are willing to talk to you. They're not just dead weight network, right? There's two types of network. They're the people who you just like collect, and you're just a collector of people and you don't ever do anything for those people. They don't even know who you are, barely. They're just connected with you somehow. And they're the people who you curate. And I'm a curation type person. So I will curate groups of people, invite them over here to our home for dinner, and we'll have a mission critical dinner party about a topic or something that is of interest to them and add value to their lives. And so in that way, I stay in touch with people and I help my portfolio. It's a virtuous circle. Somebody asked, do you have investments in Silicon Valley? What is your success rate? So the fund, let's see, I started investing in 2012 and I just had my first exit. I invested 25K into a company called Braze.com here in the New York area. That company, it was a 13 million valuation when I invested, and they went public at like an $8 or $9 billion valuation. They recently, of course, everything's, you know, there's been a downdraft, but they're still a really strong, exciting company, and I'm still holding their stock. So that one is one of my great successes. And I have a number of others that are now billion-dollar companies in the portfolio that are more recent. And then I have a second exit with Bbot, which just exited for 100 million after only 20 months of our investment. So, you know, the jury's still out, obviously, on all of the companies in these vintages right now. But because our companies are still pretty early, I think they have a lot of room to succeed. And I don't think this current recession that we're in is going to greatly deplete our portfolio.
Yeah, yeah.
That answers that question.
It does. Yes, that was perfect. So there was one question here, but before I jump to that, I do want to ask a follow-up question based off what you said, because I'm curious to get your feedback on it. So, you know, you said the R word, right? You said recession. So that's a naughty word in this crowd. So I would love to get inflation is the other one. Would love to get your outlook on the market, say the next 12 to 18 months, what you see, what you predict, and what that means for founders and entrepreneurs that, you know, I've spoken to dozens over the past couple of months that have a roadmap of needing to raise the next round within that time window. So what does that mean for them? Yeah. Would love to get your input on that.
So I have very good data points in my brain and in my bones from several recessions that I experienced as a founder. I started my company so I took it online in 1996. I was one of the first people online in America. It was before the word .com meant anything to most people. And I took it online in 96. I was starting to make money by 99. As you may recall, some of you who are closer to my age, 99 and 2000 became a watershed year because we had the first great internet crash, right? And I'll never forget, I actually got advice from some of my advisors to take the .com out of my name on my business card. And I said, well, that would be dumb because we are a .com. There's nowhere else to find us. And I'll never forget, I was worried about running out of money. I had just raised capital from Bill Ackman and Marty Peretz, a very established media investor and media mind here in New York. And my lawyer called me and he said, Laurel, did Bill sign the paperwork yet? because you wouldn't believe what's happening. Deals are just falling apart right and left, and you better get him to sign the paperwork. I'm really worried about you getting that capital. And that was March 2000. And sure enough, Bill went through with his word. He was very much a man of his word. He did make the investment. And luckily I had that little bit of cash cushion, right? So I was able to last another 2 years, which it took 2 years for the economy to start to pick up again. So if you don't have a cash cushion of 2 years, then you have a couple of choices that you're going to have to make. And I would make them right now. And I ended up having to do this as well, because it turns out I burned more of the cash than I should have. And 2 years later, I was almost at the end of my cash, and had to basically, I got a, you know how you get some of those come-ons in the mail, like, we'll give you $50,000, you're pre-approved. Well, some stupid bank sent me one of those, and I said, what the heck, I'll apply for a $50,000, line of credit.
Yeah.
And so I got that line of credit right in time. And they didn't know I was a .com. They thought it was a telecom, because it said Media Bistro.com in the, in the mailing list they had purchased. So in any case, they gave me the $50,000 just in time. My investors were kind of wary about giving me any more money after 9/11 hit, after the year 2000. So that was the second recession that I went through. So it was like a double whammy. And
Yes, it was.
we survived basically because I got that little $50,000 injection. I cut all my costs. And this is what I advise to all of you founders right now. If you don't have deep pockets around you that you can rely on, and don't trust that they're not going to give you a down round, that's the other worry you should have. So if you can at all, in any way, cut costs. So what I did was I offered more equity to my co-founders, who were quasi co-founders. It was my CTO, my COO. I offered, pay cuts to everybody, pay deferrals. I did whatever it took. I took no pay for myself, and I survived because of all those tactics. And then I found a new revenue stream by talking to customers as well. So I would just do whatever the heck you can do for to prepare yourself for the next 2 years, because you don't know what's going to happen, and it can't hurt to just prepare yourself, right?
Yeah, absolutely. And so I actually had a question here that came through the chat that was related to something we were talking about earlier. So I just want to circle back and bring this back up. You mentioned some of the scoping questions that you asked that are outside the scope of, a question that someone looking for capital could game the system essentially and come in with the answers already keyed in. So his or her question was, can you give an example from a recent interview of a type of question you would ask to dig that second level and determine whether you wanted to move forward or not with that investment?
Just like a personal question?
Mm-hmm.
Yeah,
So just looking for an example. Yep.
Yeah, I'll give you a perfect example. I mean, this is just one example. I mean, first of all, I can't give you every single example and say this is the playbook, because it's heuristics, which is rules of thumb that are based on my personal experience and my mind and the way it works and how I draw information together in the moment. But for example, I was talking to a CEO who had been brought in to help be a co-founder. And, it occurred to me, is she going to stay with this company? Because this company needs her and needs her skill set. And she's going to make it win or lose, right? And so I said to her, wow, you own 10% of the company? That's not much, is it? Are you going to be happy with that? And what I was doing there was like kind of seeding a conversation. And she wasn't, I insisted on speaking to her alone without the other co-founders there. And I was able to reveal something and uncover something about her, whether or not she was going to stay or go, based on that one question. And she admitted to me that, yeah, 10% wasn't quite what she had in mind, because, she felt that she was a key player and she had brought a lot to the table, and that was something that they were negotiating. So there I learned something. I learned that they hadn't really nailed her down yet. She still has a full-time job somewhere else on her, in her LinkedIn. She's working somewhere. She doesn't need this job. So they're going to have to really work hard to keep her. So, just things like that. That's all I'm saying, is that you have to be a canny interviewer. You have to almost be like a 60 Minutes interviewer to get to the level of people's hearts, right? When you're speaking to them, these are not just companies, these are humans. And you have to get to the human drives. What is the motivation? What's driving this person, whether it's the founder or the co-founder? You can also determine things about founder tensions just by, if you see the CTO on the call with you, or if you see that there's, 5 different people on the call, that's kind of a sign to me that the founder, the CEO, is insecure, right? On the first call to bring all the people, so there's just so many of these things. I couldn't possibly give you every single example, but I can just assure you that everybody on this call who's doing investing has to be thinking this way. Otherwise, in early stage, you just won't win as often as you could.
Yeah. So it sounds like to me, and you're trying to get to that person's why. What motivates them? Why do they get out of bed every day? Why did they even start this business in the first place?
But more than just the why. What's going to keep them going through thick and thin? What's going to help? Are they leaders? Can they lead people? Or are they the micromanagers? Are they the annoying, niggling micromanagers who aren't going to be able to lead people? Is this person a scientist or a or an entrepreneur? There's a huge difference. There's lots of people who create products, but they can't run a company. They can create a product. So there's all kinds of things that I'm looking for. And, I wouldn't be able to give you every single one of them in like this short interview.
Yeah. No, I think that paints a really good picture. I think that's what the question was trying to uncover, is an example or two of what you're trying to get to. So I think that was very well answered. What are some of the things, because I know there was a couple of folks that sent questions in advance, and they were related specifically to pitch presentations. So would love to get your input on, for the folks on the call, what are some common traits or some common things that you see when someone delivers a successful pitch presentation? And what are some of your own personal pet peeves when it comes to pitch presentations and things that some of the founders and entrepreneurs on the call might want to avoid when pitching?
I think everybody understands, there's some basics that have to be, that you have to have. You have to have double and triple checked your deck so that there are no spelling errors. I can't tell you the number of times I've seen millennials spelled incorrectly by millennials. So annoying. So definitely get millennials spelled right. No spelling errors. I don't care that, this is that you're a tech founder and you're a genius. You still have to have, you still have to be able to communicate properly in, the language of our land, which is in English. And, customers, employees, partners, they all want to see a level of professionalism. And to me, that's the base level, right? Maybe understanding more about the investing process and what VCs do and what they don't do, and whether or not, you should know a lot about venture capital in general. So you should be well read and knowledgeable about venture capital, because you have to realize in most cases, most founders should not be raising capital from venture capital. It's silly. It's a waste of their time. It's a waste of my time. So you should know whether or not this is a real VC-backed, backable company, because there's certain criteria that we VCs are all looking for. And, it's not just, oh, it's so cool to have VC. You really have to have the need for this particular type of capital. So you have to be a potentially very high growth company very quickly, or you have to be a marketplace. It takes a long time to get to high growth, but you have a unique marketplace that is far enough along where you can actually, build a high growth company. Or, maybe you're a biotech or something, but you're not going to pitch me as a biotech. You should be pitching company funds that do that type of investing. So they have a long view, a long horizon. And you should also understand the difference between a small early stage VC and a medium-sized VC that does early stage and a large VC that does early stage, because each of those have different reasons for doing deals. So for example, someone in the chat asked me if I'm interested in doing HR tech right now and future of work. Well, right now is probably the worst time for somebody to approach me for a future of work company. Simply because if you look on my portfolio, you'll see I already have a number of early stage HR tech, future of work companies. So the likelihood of me doing one more when I really need to show returns to my LPs in the next 5 years is probably pretty low, because future of work right now is going to be hit hard by the recession. If there's a recession, as we're conjecturing that we're already here. I think we are already here because of all the layoffs that we've seen in the industry, in our industry especially. And there's pain already in our industry with the decrease in the public markets for the tech companies. So definitely HR, tech, future of work. You guys are you better hang on to your seats, because I think it's going to be tough to raise capital right now.
Yeah. I think that's been a consistent message of late. So yeah, that makes perfect sense. So we're getting quite a few questions in the chat. So I was going to have a couple of other, just a couple of questions that were sent in advance that I want to ask of you, Laurel, and then we'll move to the chat because I want to make sure we address each one of those and allot enough time for that. Lots of great questions, and if anybody in the audience, if you have a question, just type it into the Q&A, and we're going to move to those here in a couple of minutes. But we've had several good ones come in, so we'll transition to those here in a second. One of the questions that was asked in advance that I thought was a really good question is, wanted your advice on addressable market size. I think that's a pitfall a lot of times where people don't really understand what their actual addressable market is. Particularly when going in to present to a VC. So how do you recommend a founder or entrepreneur hone in on exactly what their addressable market size is? Are there tools that are out there? How should they be looking at that? And what advice would you give them?
I mean, if you're really serious about starting a company, I would definitely invest in some research that's been done if it's not already on the internet somewhere. So I would do your own research, but if you can't find handy research, you might want to pay some money to buy a research paper or a white paper by Forrester or by one of these very expensive places to really hammer home your thesis. But you can also do back of the envelope guesses, which every VC is going to see through, but maybe they'll believe it by getting some bigger number and calculating down from there. So you can say there are 1 billion companies in the US that use, I'm just throwing out numbers here, cloud software, and of those we think we're going to be able to get 1% in the next 5 years, and then you back into some numbers. I mean, there's lots of different ways to do it. But everybody knows that it's guesswork, and that that it's not a real science, unless of course Forrester is actually or one of those big research firms has actually done the research. So we all know that it's kind of a guesswork. I guess we just want to see that you've done the work and tried to come up with something that makes sense, and that you have a strategy for going after those people, and that strategy makes sense. So there is no perfect way to come up with the right numbers, and we all understand that, and we all know that your projections in the early stages are going to be just that, projections, and they're fake numbers. But we also want to see ambition, and we want to see that you really do have the idea of growing to be an enormous company, and we want to see the steps that you'll take to get there, and that those steps make sense mathematically as well as just logically. So I I guess the other argument to make is you might want to be the owner of a small market, right? So let's say there's a market for, vertical farming or something. And you are the one patented technique that everybody's adopting for vertical farms, and you've sewn up all the partners, and wow, that's an impressive feat. And so even though it might not be the biggest market out there, it might be interesting to a lot of funds that do vertical SaaS investments, because they like that. They like a deep player that has done all these partnerships and owns that small market. So they can invest in a multitude of these small market vertical SaaS companies and make a lot of money that way. So there's, for every type of company that's high growth or deep growth, shall we say, there is an investor, right? There's a VC out there. I guess I'm kind of contradicting what I said before, but not really, because I still do see a lot of founders who come to me with, hey, I'm a one-person show, and I have a website and a community, and I think I can monetize with sponsorship, and should I get venture capital, right? And I say no.
Yeah.
One-person company that's a community online that has like 2,500 customers, but they can only pay $49 a year. No, that is a lifestyle business. You should not bother yourself with venture capital.
Yeah, makes perfect sense. And then one last question of my own, and then we'll go to the Q&A. So again, there's lots of great questions coming in, and thank you guys for all the questions. This is great conversation. I appreciate it. And thank you, Laurel,
Sure.
for your thoughtful answers. So my last question, and we'll transition, is a little bit of a broad one. So I apologize for that. I like to ask very specific questions, but this is a little bit broad. So I'll apologize in advance. What is one lesson or piece of advice or best practice, anything along those lines, that you would hope any of the founders and entrepreneurs that are on the call today would take away or would walk away from this conversation with? Is there one thing
piece
that
of advice? I mean, I've
just
given
one
like
piece of
5
advice,
of them.
best
How many more do
Yeah,
you
I
want?
know. I know.
Okay, one piece of advice. I mean, I think I said
I told you it was tough.
Yeah, I mean, I don't think there is one piece of advice. I think everybody has a unique situation. Each one of these people on the call, has a unique business idea or business that's ongoing, and they have, a different situation that they're facing, and different, capital in the bank or no capital in the bank that they're dealing with. So I guess here's the thing: wake up every morning and do what you love. Right? And what you love should bring you money, and it should bring you success. And if that doesn't work, then switch things, switch activities, turn that thing into a side hustle and get a job. But I mean, that's what I did. I started out hosting a cocktail party. It was what I loved, and I didn't expect to make any money. And then over time, I figured out, what? I can figure out a way to make money off this and still do more and more of this. And every single day I woke up challenged, excited, fearful. And that's what you should experience. You should be living your life as if it's the last day on earth, right? Live every day like that. If you're not feeling that way, at least most of the time, then you're in the wrong game. Move on, do this as a hobby and find something else to do as a job. But I just think you can combine both. You can love what you do and do what you love every single day. And I guess that's my, big picture advice.
Yeah, and that's great advice. So thank you. And I, again, apologize for the broad question. So we'll transition to the Q&A here. And I just want to make sure we go through in order so we answer each question. And again, folks, if you have questions, type them out in the Q&A portion, and we'll make sure to ask them of Laurel and get her response.
I think we're up to Rachel. Well, I think we're up to Rachel Fowler.
Rachel, that's where we're at. Yep.
So for you as a VC, what types of returns or exit strategies do you look for? I mean, I've promised my investors that each of my companies can 10x that company, right? So I'm looking for the ability of each company that I talk to 10x my investment in them. So however they want to do it, IPO, sale, build it and they will buy it kind of thing. That's, I don't know if that answers your question, but that's what I'm looking for. And that doesn't mean my whole fund is going to 10x. That's unrealistic. But each individual investment, if I'm looking at it with that lens, then the overall fund should definitely be able to return 5x. And 5x would be an exceptional return for a fund.
Next one here, what resources did you use to prepare to start your venture company? Any resources you would recommend for a person interested in starting a VC fund?
It's the hardest thing in the world to start a VC fund. The only people who should be doing it, honestly, are people with an amazing network of billionaires. I mean, it is so hard. I'm not kidding. And either you have this network because you grew up with them or you met them along the way in your career and they trust you. But that I struggled. I mean, I only knew 1 or 2 billionaires at the most. And I would try to meet billionaires wherever I went and collect them and convince them to invest in me. But you need a lot. You need a lot to offer because you're competing against the top people from all the top schools who've worked at all the top funds, and they're all raising capital. It's so hard. So that's the best way to prepare, is to have a network.
So there's a couple of questions here, and thank you for answering that, Laurel. There's a couple of comments here wondering how to get in touch with you, Laurel. I'll let you handle that response.
I mean, I'm pretty easy to find. It's, you can reach out to me at my email address, laurel@supernode.vc. I'm not guaranteeing I'm going to invest in anything that I see on the call today, but I'm happy to take a look at a deck. So please just, send me your deck and a few lines about the company, and I will definitely review it.
Along those lines, there was a sort of a follow-up piggyback question to that from Jan. What industries are you most interested in now as you spend down the remaining dollars of your fund?
Yeah, so right now I'm still looking at vertical SaaS because I think there's still opportunities there. I'm looking a little at Web3, but the valuations still seem pretty crazy there, to be honest. And I like picks and shovels in Web3. I don't want to invest in, like just a project with tokens. I would rather invest in something that enables projects to do something better, quicker, faster, cheaper. And let's see, I'm still looking at fintech of all kinds. Healthcare tech, digital healthcare, but not consumer facing. I do not want to see, the new breastfeeding pump that is going to revolutionize breastfeeding. I'm sorry, it's just, it's not my space, consumer tech, but I love digital healthcare tech that helps doctors do their jobs better, faster, quicker, hospital administrators save money, hospital systems save time and money and energy on things. I love things like that help companies save time and money.
Mm-hmm. Yep. Let's see. How does a startup university get investment?
A startup university?
Mm-hmm.
What's that?
Sounds like starting a university. I don't know if there's a different type of funding for like a private institution, private higher learning.
I'm sorry, but I don't know anything about ed tech or educational funds. So I would think government, private, private industry that does public-private partnerships. Maybe something like that. Maybe someone else knows. Yeah. Someone asked, what resources did you use to prepare to start your, oh, I see. The other, so resources to start a venture company. You basically want to take a lot of the heavy load off yourself. So you need enough money to be able to afford something like Carta or AngelList to launch your venture fund. If you're doing a very small early stage venture fund, those are very helpful, and you need an accountant who knows venture. So I use RSMUS. Those guys know venture capital really well, and you want a lawyer who absolutely knows how to do fund formation and who is credible enough so that your LPs are trusting you. Because if you go with a no-name law firm that they've never heard of, they might not trust that the docs are like plain vanilla docs. So I would go with like Cooley, who I use, or somebody like that, of that caliber. So you're going to spend a little extra on some of those things, but in the long run, it serves you well because you'll get a better response from sophisticated LPs. Someone also asked, what are your LPs expecting of you now that was different a year ago? I think they're worried about deaths in the family, you know, and with good reason. We're worried about that. We're worried that, you know, our little companies are going to fail. So everybody's worried about that. For every fund I talk to, all the fund managers are saying that they're holding back. They're not investing right now. They're just being very aware of what their current portfolio might need. And so a lot of us are, you know, reaching out to our founders and asking them, what do you need help with? How's it going? That kind of thing. And we're trying to support our strongest though. So you have to realize if you already have investment from a VC, they might not back you, not because they don't like you, but because they have 6 other companies that are absolutely in the same position of needing capital, but are further along and have better chances of survival. So this is, what do they call it in the hospital? Triage.
Yeah. Another question here. Are you doing Series A financing? If so, do you lead?
No, we don't lead, and we don't do Series A. We like deals. So right now I'm looking for really well-priced rounds. So under 7 million pre-seed, seed under 10 million. That's what I'm looking at, because you know what? It's out there now. People are actually lowering their valuations. I didn't think so a few months ago, but now I'm starting to see very good deals.
Yeah. Yeah, you're exactly right. Another question here. Please share your thoughts on safes.
I mean, everybody's doing them, so we're kind of stuck doing them. I don't really have, I don't have an experience of not doing safes. I started out in this industry when it was pretty hot and everyone was doing safes. So I don't have an opinion one way or another, except that, you know, I think safes will still happen until the tables get so turned that the VCs are in charge again. So, you know, we've gone through many business cycles, as you know, and right now we're going like this. Once we hit there, down here, this is when the VCs will be in charge, and you're going to see much worse terms for founders. It's going to get very extreme, and maybe safes won't be as prominent then, and you'll have priced rounds that are pretty low.
Yeah. Yeah. And in the interest of time here, I want to be respectful of your time, Laurel, as well. We'll take one more question and then we'll sort of wrap things up here, just to be respectful of everyone's time. How much equity do you require to invest?
I don't have a requirement for this fund. In the next fund, I would probably have, you know, 3 to 7%, but I'm a small fund. I don't ever want to be an enormous fund manager. I really like playing in the early stages, and I don't think early stages need, you know, that much capital in the beginning. I think everybody can be pretty capital efficient.
Yeah, agreed. And Laurel, before we sort of wrap things up here, is there anything that you wanted to share with the audience that I didn't ask before we sort of kick things back over to Khushbu to wrap up?
No, I think you guys did a great job with the questions, and I love the questions from the audience. You guys are also very sophisticated, and I'm pleasantly surprised by the level of questions.
Yes, yes. Activity was great. Tons of questions. I think that speaks to how intriguing your answers were, Laurel. Good answers, spurn questions, and that was a very high level of questions. So thank you to the audience. Also, thank you to you, Laurel.
One thing, I host a monthly gathering called Serial Entrepreneurs to help bring founders together, and we have these discussions there every month. So if you want to join my monthly sessions, they're kind of like, just this kind of real talk, please reach out to me for the Serial Entrepreneurs Breakfast, and I will get you an invite to that. You just pay for your breakfast. There's no extra fee or anything. So just to cover costs.
Very cool. Very cool. Thank you for sharing that, Laurel. So again, thank you, Laurel. I want to thank Kelly Caviglia of Bridge Bank for sponsoring today. Thank all the audience for your time. And Laurel, that was, like I said, very informative. We appreciate you sharing your experience with us, your extensive knowledge. It's an incredibly valuable resource for our audience, and we thank you for your time. And we look forward to continuing the conversation soon. And with that, I'll kick things back over to Kushbu to wrap us up here.
Thank you so much, Matt. That was quite interactive session and had a lot of learning for me as well. Great. Thank you, audience, for being so patient with us and making this such a successful event. Just for your information, we are going to have another Meet the VC on August 10th, which will be by Adam Struck from Struck Capital at same time, 12 p.m. PST. So looking forward to that as well. And with that, you can find us all over the interwebs. Just a reminder, this webinar will be available within 48 hours on our YouTube page. We appreciate you joining in today. With that note, we conclude today's webinar. Thank you so much, guys. Thank you.
Thanks, everyone.
Have a really nice day. Bye.